The news we are currently facing is provoking a significant level of anxiety. In some regions, there are reports of increased sensitivity in international affairs, leading to unexpected difficulties in the movement of essential raw materials. At the same time, despite a major economic entity initiating stringent policies to protect domestic industries, the immediate response from the global market seems to be one of caution rather than action. Additionally, several leading investment banks have made the decision to temporarily restrict redemptions of certain high-risk assets due to the rising instability in the market. Why are such complex events occurring all at once? In this turbulent time, when the key pillars supporting the global economy are shaking, those of us contemplating investments find it challenging to make sense of this massive time. By the time we wrap up this discussion, various phenomena that have felt fragmented until now will be clearly understood within a single context. Let us now delve deeply into the key issues that we need to analyze closely. The international transport routes of specific regions may seem somewhat distant from our daily lives. However, this crucial junction plays a major role in the flow of energy resources spreading across the globe. Despite its relatively small area, a significant portion of the world's energy transport passes through here. Every day, an enormous amount of essential fuel flows through this narrow passage. The key energy hub in this area consists of large storage facilities and a complex network, meaning that even minor movements can have global repercussions. The reason this strategic gateway is referred to as the lifeblood stems from a painful past experience. During previous upheavals, this transport route faced severe disruptions, leading to the bitter memory of a significant turmoil in the global economy. This experience has left a deep imprint on neighboring countries, prompting them to focus on strengthening defensive measures to ensure the safety of this route. As a result, the surrounding area has been fortified with a stringent security system and a sophisticated surveillance network built in multiple layers. However, surprisingly, a powerful entity that has caused conflicts has maintained an extremely cautious approach, avoiding access to key energy infrastructures in the vicinity for a long time. This has remained unchanged despite international requests and strong internal demands. At some point, direct military action was taken in this area, but it was limited to specific defensive facilities rather than major economic arteries. There was no intervention in key production facilities or large-scale energy transport networks. All past rulers have recognized this region's commercial core infrastructure as an important line that cannot be crossed. The current leadership also remains halted at that boundary. So why is this route considered such a decisive, last line of defense? The answer becomes clear when you unfold the map. Tankers departing from this area must pass through an extremely narrow waterway to reach various parts of the world. The width of this narrow passage is less than that of a short city road. A significant amount of global energy moves through this maritime route, and the core coastline of this strategic choke point is under the influence of specific power. If this force decides to block the passage, it can disrupt the flow of energy by mobilizing modern means. In fact, this concern has become a reality this time. The entity has officially announced a ban on navigation. Attacks on commercial vessels have occurred at nearby ports, and even major energy storage facilities in neighboring countries are facing threats. Currently, hundreds of tankers are waiting, stranded in front of this narrow passage. Although this entity is at a disadvantage in military strength, it is nonetheless resisting while holding the heart of the global economy. However, the parties suffering the most in this crisis are not the direct combatants in the military conflict. The sudden and significant decline you have felt in your investment portfolio today is a direct consequence of this situation. Before these events came to light, major stock market indicators showed a relatively stable trend. However, recently, they have experienced unpredictable and intense fluctuations, signaling risks. In a short span of time, a significant portion of the overall market value has evaporated. For ordinary investors, this is akin to losing a substantial amount of wealth in a very brief period. Some have even lamented that large sums disappeared from their investment assets in just a few hours. As a result, the term emergency asset liquidation has become quite common these days. This refers to the hurried process of selling off holdings to prevent further losses. Institutions managing large funds are also restructuring their investment portfolios in preparation for the most pessimistic scenarios. The problem is that this widespread turmoil is creating a vicious cycle, leading to large-scale stock sell-offs that further accelerate the market's downward trend. Is the current recession the endpoint, or is it the beginning of a deeper decline? Looking at the global economy as a whole, the situation is much more serious. The prices of key commodities, which were stable until this crisis, have nearly doubled in the blink of an eye. They surged at an unbelievable rate in less than a month, What is even more concerning is that the sharp rise in the prices of these global key resources typically takes a few weeks to a month to be reflected in consumer prices. The inflationary pressure we are currently experiencing is merely the result of the initial stages, and the most painful situation has yet to come. The practical inflationary pressure will now be felt in earnest. This is not just a matter of the prices of specific raw materials. When the value of key resources rises, what else becomes more expensive? All related costs increase. This includes fuel costs necessary for transporting goods, energy costs for operating production facilities, and the prices of various service offerings. Major energy sources are like the bloodstream of a modern economy. When the cost of this bloodstream rises, the overall vitality of the economy begins to falter. According to analyses from major economic research institutions, if international oil prices exceed a certain threshold, domestic consumer prices will rise further, and the overall economic growth of the country will significantly shrink. Currently, oil prices are already far exceeding these forecasts. To make matters worse, there is also a decline in currency value compounding the situation. Compared to the same time last year, the value of our currency has significantly declined. Even when importing the same amount of essential energy, the costs paid in our currency have increased substantially. We are simultaneously experiencing the dual challenges of rising energy prices and falling currency value. Our country relies heavily on imports for a significant portion of essential energy sources, with a particularly extreme dependence on certain suppliers. International investment institutions have diagnosed that our economy is much more vulnerable to fluctuations in energy prices due to a lack of suitable alternative suppliers compared to other major countries. At this point, one might wonder, is the country that directly caused this situation truly safe? Surprisingly, even that giant nation, which is one of the largest energy producers in the world, is currently facing internal difficulties. On the contrary, there is a structure that benefits from rising energy prices. According to an investment analysis firm, certain energy-related industries within the country are expected to reap substantial additional profits due to this situation. In particular, companies with low dependence on international transportation networks are escaping the impact of the maritime transport blockade and are generating enormous profits solely from the increase in energy prices. Even the top leader has stated through personal communication channels, "We are the world's leading energy producer. When prices rise, it benefits us greatly." So, isn't this actually a favorable situation for the country? Here, an unexpected contradiction emerges. While energy companies are making huge profits, ordinary citizens are enduring unbearable hardships. Fuel prices, which were stable before the conflict, have suddenly skyrocketed. Key figures from the previous regime, who have fled abroad, are quickly expanding their influence, and there are even bounties placed on key members of the current ruling power. This is what this massive country is pursuing, to induce the residents of the conflict area to voluntarily change the power dynamics through economic pressure, without directly involving its military. This is known as the regime change strategy. However, this strategy has a critical weakness. Changes in that region require time, during which the entire world must endure that suffering together. So, how do such difficulties manifest in our ordinary households? Take a moment to think about it. How many stages of price increases accumulate before a simple basket of groceries reaches our dining table? Essential resources are crucial at every step of the process, from the fertilizers needed to grow crops, to the heating energy required to maintain the temperature in our homes, and the logistics costs involved in transporting the harvest. The electricity needed to keep the refrigerated displays in stores is largely supplied by major energy sources. Once energy costs rise, expenses balloon at every stage, from production to final purchase. Therefore, when energy resource prices increase, households typically start to feel the burden of essential living expenses a few weeks later. The time when the peak international energy prices will be fully reflected in households is expected to be from the end of this month to the beginning of next month. Remember the last time things were particularly unusual. Grocery prices soared, delivery fees increased, and even the cost of ordinary dining out went up. Consumer prices surged that year, and the actual perceived inflation was likely much higher. Currently, the pace of rising energy resource prices is significantly steeper than it was back then, and there are critical differences as well. So, what actions can ordinary investors like us take during such tumultuous times? In fact, there are effective countermeasures available. Ultimately, I will summarize the content and share practical methods we can realistically implement at this moment. First, let's revisit the important context. The major powers have targeted the core areas of conflict, while avoiding the most critical energy supply facilities. This is clearly because they are aware that any intervention would lead to a spike in energy prices. Despite being militarily disadvantaged, the conflicting forces are leveraging international energy transport routes to exploit vulnerabilities in the global economy, and as a result, our country, which imports a significant portion of its essential energy sources, is directly affected. So, how can individuals wisely navigate this situation? First, expenditures related to major energy sources are likely to remain high for the time being. This may be the cheapest moment to secure necessary energy resources or related items in advance, while continuously monitoring market trends to develop the habit of determining the optimal purchasing timing. Even small, consistent stockpiling can lead to long-term cost savings. Second, it is wise to prepare easily stored essential daily items before living costs rise significantly. Items such as cooking oil, flour, and convenience foods tend to reflect the rise in international energy prices with a considerable delay in consumer prices, so now may be the last opportunity before price increases. Third, it is crucial to closely monitor changes in interest rates. When energy prices rise, inflation becomes unstable, and if inflationary pressures increase, it becomes difficult for central banks to lower benchmark interest rates. Those using variable rate loans should carefully consider switching to fixed rates. In uncertain times regarding interest rate direction, fixed rates can help mitigate some risks. Fourth, adopt a long-term perspective and turn your attention to advanced technology sectors. Although there is significant uncertainty in the energy market right now, the need for leading technological advancements, such as artificial intelligence, will continue regardless of external circumstances. This is why some analyses suggest that moments of temporary undervaluation due to global instability can actually present opportunities for long-term investment. Of course, all investment decisions should always be made based on careful analysis and judgment by the individual. The most important realization that this situation leaves us with ultimately boils down to one thing: countries that are entirely dependent on foreign core energy sources can have their economic foundations directly shaken by even minor movements occurring on the other side of the globe. This harsh reality, where a narrow international shipping route can determine the fate of our economy, would have been difficult to grasp without the current conflict. Whether this crisis will simply pass as a fleeting storm, or become a turning point that innovates our society's fundamental energy policies and economic structure depends on the wise choices we all make. If you found the information shared today helpful, I would appreciate your support through likes and subscriptions. Your support is a great motivation for me to create even more valuable content. I look forward to seeing you in the next. If this video has been helpful to you, please show your support by liking and subscribing. Your encouragement is a great motivation for me to create even more valuable content. I look forward to seeing you in the next video. Thank you.